This is Kerry Artac with Artac Advisory. This is a AgriTalk video supplement for Monday afternoon's show for the week of Monday, January 11th. I'm going to be covering ethanol, corn, and soybeans in this video. I'm going to be walking you through weekly continuation charts on all three markets. Before I jump into that, please, if you haven't in some time, fill out my free trial form. I say in some time because I offer a new free trial, 2-week free trial every 6 months. Keeps you in the loop. You'll get my daily advisory letters, all of them, every single day for 2 weeks in a row. I'll give you a call. During that time, you could have a consultation. We could talk about your trading or hedging needs or any ideas that you need to flesh out, so forth and so on. So please do that or tell any of your friends about that. I really appreciate the referrals. So without further ado, let's jump into ethanol. I'm posting ethanol here. I'm talking about it because of the buy signal that played out last week. If you've watched any of my recent ethanol videos, I've done several of them in the last 4 or 5 months, and I've been mentioning this channel top that stretches back to activity as far back as 2015, 2016. And, we tested this in October, backed off some, and now, in part, by virtue of the rollover to the May contract, we have gapped higher and settled comfortably above a formation that this week is at 1.505. This is a floor of support, and I'll just let you know that as we continue in the late, by February 1st, it's at 1.500. So it's in the 1.50 handle, if you will, through the month of January. It is a floor of support that can absorb selling into later year, and above which I do think that over the next 6 to 8 months we can continue up into the 2.241 region, which is a full channel formation based on the same set of lows. And I get 6 months because it took about 6 months from the March low to the October high to reach this same width. And so now that we've cleared this, another 6 months, 8 months, July, August, September of this year should be realize the 2.241 formation. On the way up, just want to mention if you do watch or trade ethanol near term, I do have respectable resistance in the 1.760 area. 1.760 is the December 2016 high, FYI. But what I like about it is that it coincides with the rising channel top that this week is at 1.724. It does rise to 1.760 exactly the first week of February, which is probably the time horizon in which we will wind up testing this area. 1.760 can contain monthly buying pressures when tested, possibly into spring trade. From here, the market could fall back into the low 1.5 area within a month or two of testing 1.760. But given the longer-term buy signal that's at play above 1.505, I think you should ultimately expect a settlement above this formation at 1.760 the first week of February, and if so, acceleration 2 to 3 months then likely before realizing this 2.241 area where we could top out through the balance of 2021. Now, if we fall back and close the week Friday below 1.505, all bets are off. No longer expecting 6 months bullish continuation into the 2.241 region, and the market then actually may fall back nicely, although I'm not prepared to say exactly where. I think at the very least you can expect a resumption of consolidative trade, and I'll be on it at that point in time over the following weeks to apprise you of what the downward sell signal might be in terms of bearish rotation into later year. But right now, bottom line ethanol, bullish above 1.505, expecting 2.241 over the next 6 to 8 months with a respectable pivot point on the way up, containment area at 1.760. On to March corn. This is a weekly continuation chart as well, volume-based rollover. We have had a buy signal at play for a couple of weeks now, having cleared this 4.65, 465 half rather, channel top. This is our floor of support now through the rest of the year, and above which I think very similar to ethanol, that over the next 6 to 8 months we should push into a range of resistance that begins at 622 roughly, and right now ends at 651.5. But this descending 2/3 speed line is in the upper 630s by this summer. So I'm going to say 620s, 630s anticipated as a summer 2021 objective that remains intact above 465.5. On the way up, we do have some respectable resistance areas, 536.25 being one of them, the 2012 low, and then on the way up, a 50% retracement from the 2012 high to the 2020 low is at 579.5, I believe. And I just didn't want to cloud this image with what remains the big picture. Bullish above 465.5, anticipating the 620s, 630s into summer of this year. Now, downside, we've got a lot going on all the way down to 641.5. So while I'm definitely comfortable playing the bullish side and advise playing the bullish side above 465.5, I'm not comfortable playing the bearish side. In other words, selling this market aggressively into spring, summer of this year until or unless we close below 441.5. That is this ascending 1/3 speed line. It gets readjusted every time a new high is put out, so it's a fairly dynamic approach. I'll be watching this in my daily corn futures letters. Anybody who subscribes to the corn letter will be apprised of these precise points as to where do I go short corn, where do I sell corn aggressively, because at this point in time, closing below 441.5 would tell me a good high through spring, the market then likely over the following several months to fall back into the 360s. But we're not there right now. Bottom line with corn, bullish above 465.5, anticipating the 620s, 630s into summer of this year. Finally, soybeans. There's a bit to nuance here with soybeans. I'm going to backtrack a little bit and just show you that we've had a series of stair-step significant buy signals on this chart. The first was in late August when we cleared this 928 half channel top, then anticipating this more significant 1137 3/4 channel top that didn't actually hold well on the way up. We pushed through it, which then signaled another buy signal to 1372.25, or less, in other words, wherever the speed line is at that time. And so we are in still this phase. We have met that objective, 1372.25, able to absorb buying through spring. From here, we could fall back into the 1130s over the next several months. Now, it should be noted, of course, that we did settle just above this 1372.25 2/3 speed line by only about 1.5 cents last week. Certainly not enough to give it validity. I like to see a 1% violation on these long-term levels. So in other words, 1372.25, 1% up from that is around 1386 even, if I'm doing my math correctly. So we'll just call it 1386 even. Even a daily settlement this week, Monday, Tuesday, Wednesday, above 1386 even would be cause for going long or staying long, wherever your position may be. There's no good reason that if we settle above 1372.25 by at least a 1% margin of 1386 or higher to be hedged this market long term. There's been no good reason up until we tested this 1372.25. So if you're hedged now based on the test of this speed line, fine. Stay hedged, because this market from here can fall back despite the fact that we settled just above the speed line last Friday. But any daily settlement above 1386 even, liquidate those hedges. Find a way to go long if you're not long already, and stay long into the 1660s, which, based on present vertical volatility, I'm going to give that 1 to 2 months as a realistic target. Now, it certainly could take into late spring 3 to 5 months, but honestly, if we clear 1372.25 by at least a 1% margin any day, I think by the end of March, we should reach the 1660 3/4 formation, which can contain buying then through the balance of the year. Now, I will put, this is the last thing I'm going to say. If we close, say, Tuesday above 1372.25 by a 1% margin, you also want to see that happen on Friday. Fridays are kind of finalizing events. They have closure to them. And so there are many times where you do get a meaningful buy signal on a Tuesday that looks to be long-term in scope. And then Friday is the rejection day. So be cognizant of that. Yes, you want to see a settlement above 1372 and a quarter by a 1% margin any given day is good enough for me, but then follow through with the weekly settlement above the same 1386, okay? Until then, soybeans can show toppy trade. I don't have a sell signal yet. Last thing I'll say about that, if we close this week, and I don't have it illustrated here, but if we close this week below 1290 even, then yes, this market tips south into the 1130s, probably by the end of February. That is all I have to say for this week's AgriTalk video supplement.
So do yourself a favor. Fill out the free trial form on this website. Take that 2-week test drive. You've nothing to lose and much to gain.